Hello everyone, welcome to the channel. Today, we will analyze the latest developments in the U.S. stock market, which is witnessing an exciting period. When investor sentiment changed dramatically after signals from the U.S. Federal Reserve, along with a series of remarkable financial reports from leading corporations. In the most recent trading session, all three major Wall Street indexes recorded strong gains. The Dow Jones rose nearly 2% and closed at a new historical high. The S&P 500 also added more than 1.5%, reflecting a broadly positive consensus, while the Nasdaq Composite jumped nearly 1.9%, thanks to a strong rebound from technology stocks. This development shows that money is returning to the market after a short correction, and the technology group continues to play a leading role in the trend. The most important driver of this rally has been expectations about monetary policy. In a recent speech, the Fed chairman suggested that a rate cut in September was entirely possible if economic data continued to show a slowdown in inflation. This information immediately had a strong impact on investor sentiment. After months of facing high interest rates, the stock market has been looking for a signal of easing. And when this expectation gradually became clearer, stocks responded very positively. In the technology group, large cap stocks such as Nvidia, Apple, and Microsoft all increased sharply. Nvidia, in particular, is in the spotlight as it is about to release its financial report. As a pillar in the field of artificial intelligence and semiconductor chip manufacturing, Nvidia's business results could become a major catalyst for the entire market. If the report exceeds expectations, the Nasdaq is likely to continue to break out. But if the results are disappointing, the technology market could be under strong correction pressure. Not only technology, other industries also showed clear recovery. Banks and financials have done well as bond yields have cooled. Industrials and energy have benefited from expectations of a rebound in consumption. Retailing has also been in focus as many investors look ahead to earnings season to gauge the health of the U.S. consumer. The spread suggests this is more than just a temporary tech rally, but a broader consensus across the market. However, risks remain. In the coming weeks, the market will receive a series of important economic data, such as the August jobs report, consumer inflation index, and retail sales. If these numbers continue to reflect a reasonable cooling of the U.S. economy, the market will maintain expectations of an early Fed rate cut. But if the data suddenly heats up again, all scenarios can quickly reverse. In addition, the global context is still volatile, as trade tensions, oil price fluctuations, and economic trends in Europe or Asia can all affect international capital flows into the U.S. In the short term, the market is likely to continue its upward trend, with the focus on the business results of large technology corporations. Investors are betting that these companies will maintain their growth rate, especially in the field of artificial intelligence. In the medium term, the decisive factor will be the Fed's policy. If the Fed really cuts interest rates from September, this could be an important boost to open a new bullish cycle for U.S. stocks. For investors, the appropriate strategy at this time is to closely monitor developments and allocate capital flexibly. In the short term, it is possible to take advantage of corrections to accumulate stocks in industries with clear prospects such as technology, finance, or clean energy. In the medium and long term, it is advisable to diversify the portfolio, not focusing too much on a few growth stocks, but combining them with codes with solid foundations to minimize risks. The most important thing is to closely observe signals from the Fed and economic data, because these are the guiding principles for market trends in the coming time. In summary, the U.S. stock market is currently entering an exciting period led by the technology group and expectations that the Fed will lower interest rates. However, this is also a time to be cautious, because any economic data that is not as expected can cause the market to reverse. We will continue to closely monitor these factors to have more detailed analysis in the next newsletter. If you find this content useful, don't forget to like, subscribe to the channel, and turn on the notification bell so you don't miss the latest updates on the global financial market. Thank you for watching and see you in the next video.